Welcome back. Chevron reporting a mixed bag this morning, missing on earnings but beating on revenue. Weak margins pushing its refining business into a loss for the first time since 2020. We will hear from ExxonMobil in the next hour, and I will be speaking with the chairman and CEO of Chevron coming up in the 8 a.m. hour, so don't miss. Mike Wirth here to give us the backdrop on the earnings as well as new policy coming in from the Trump administration. Meanwhile, Apple is reporting a double beat last night, forecasting higher revenue growth for the first quarter, but the tech giant missed the estimate on iPhone sales, reporting an 11% decline in China. Still, Apple shares are up 3 2/3%. Next week, Alphabet is out on Tuesday and Amazon is out on Thursday. These will be the market movers to watch that could set the tone for the broader averages. Joining me now is the Fitzgerald Group Principal, Keith Fitz-Gerald. Keith, great to see you. Thank you so much for being here. What do you make of earnings so far? How would you assess the earnings season?
Well, I think we're into it the way I expected. I like what I'm seeing. The strong companies are rising to the top. The weak ones, of course, are being left in the dust. So to me, it's all about the data. It's about expectations, who's delivering, who's performing, because there's a lot of numbers that are just simply not there, Maria. I like it. I like it. I like it.
What do you mean there are numbers that are simply not there?
Well, for example, if companies are providing guidance but they're not able to deliver, and if you look back over the last couple of quarters, you can see which executives really have their hand on the lever. For example, Tim Cook came through with Apple. He told people he was going to come through with Apple. He told people that his services were going to be growing. He told people his margins were going to be expanding, and he delivered. On the other hand, you have some of the companies out there, for example, that are going to be struggling with EPS. They're going to be struggling with projections. I'm very interested next week to see if pharma can continue to dig its way out of the hole, for example, on the other side of the fence.
I mean, based on my reporting on the energy companies, a lot of people were expecting sort of a blasé quarter for Chevron and felt that the most important commentary would be that of 2025. And what folks are saying, managers of businesses are saying about their expectations for this year. So has that been successful in your view?
Well, I think that's a smart question. I think with regard to Chevron, yes, it has. And I'd be very interested to watch your conversation here shortly, because to me, you know, Chevron is one of those companies that is very capable of delivering. People get distracted by oil prices themselves. But with a company like Chevron, it's all about stability, ongoing operations. It's a massive dividend producer. Can that continue? Those are the things that I'm looking for. And the answer in Chevron's numbers is very much yes, as far as I'm concerned.
OpenAI reportedly in early talks to raise up to $40 billion in a new round of funding. This puts the chat GPT maker value at as high as $300 billion, Keith. Japan SoftBank leading the way on funding, and it's in talks to invest upwards of $25 billion. OpenAI also partnering with the U.S. national laboratories, where it'll use the latest AI models for scientific research and nuclear weapons security. Earlier this week, OpenAI released its ChatGPT Gov platform for government use. The company is expanding. And, of course, we see the commentary around China's DeepSeek. It looks like Silicon Valley is excited and sort of impressed with what is coming out of China. Your reaction?
Well, they ought to be. DeepSeek was deep leak. I'm sorry that so many people sought fit to use it, because China just pulled off the biggest intelligence coup in history. The fact that Silicon Valley is excited about it tells me that competition is about to get unleashed. That's always a good thing. You know, Silicon Valley may be a lot of things, Maria, but stupid's not one of them. And if they can push back, they can out-innovate, they can outspend, you know what? That's a good thing.
What about the Fed, Keith? The preferred inflation reading, the December PCE index is out this morning at 8:30. What are you expecting?
I think the numbers are going to be hard to stomach in a lot of ways. The question is, what does the Fed think about the numbers, in my mind? Because really that's what traders are reacting to. It's the casinification of what do they think Jay Powell might do, or do they think that might impact rates? I think the Fed's been wrong all along, so I think numbers are going to be hard to come down. Prices for the wallets of consumers are what I really want to see come down, never mind the rate of inflation. And that's simply not going to be reflected in the numbers.
I mean, are we going to see inflation come down this year, do you think, as President Trump tries to tap into energy capacity here and get prices lower?
I sure hope so. I think if anybody's got a shot at doing it, it is President Trump. I think that his policies are going to unleash a wave of productivity and potentially money that the likes of which we haven't seen in modern market history. So I'm cautiously very optimistic.
All right, Keith, great to see you this morning. Thanks so much. Keith Fitz-Gerald joining us on Market. Stay with us. We'll be right back.